So thank you so much for spending your evening here with us, me and Chris here. And today we're going to talk about one asset class that's been very interesting. And, I've always been known about it, but, it's in the past year, I've spent a little bit more time on it. And recently, I actually visited some of the properties that we'll actually be having for our investments for ourselves and also passive investors as well. So that's mobile home parks. That's one of the reasons you're here today. So let me get started with our slides, and we'll introduce, the host and the speaker as well. Let me do the presentation here. So during this time, I wanted to just share the poll results here. We are, in terms of audience that dialed in today, and I know not everyone responded, but most of you have some investing experiences, and some of you have had passive or active investing experiences. However, none of you have invested in mobile home parks, so you're in the perfect place. So what we'll talk about today is starting with the intro and the economics in the market and what mobile home parks, and also impact and profit with us at Life Mission Capital before we open up for Q&A. And as always, disclaimer that this presentation and the conversation today is for general information purpose only. Please don't use it as investing, tax, or legal advice. So I'm your host, Missy Liu. I may or may not have mentioned a few minutes ago, and I'm the founding partner at Life Mission Capital. But first of all, I really want to congratulate you for being here. And most of you know the power of passive income and know that financial freedom is only for those who learn about it and work for it. You can have one, maybe two jobs, but buying cash flowing assets like apartments, mobile home parks, etc., really is the way to make money work for you and really enjoy the most precious resource out there at this time. So about me, you see a few pictures of me here. I like to say that I have three families. I've been fortunate and blessed. Me and my husband, we got married last year. So his side of the family. And also second picture, my host family, I was an exchange student here in the US. And the last picture, my big family in China. And the reason I mention all this to you is because I, apart from, kind of the real estate experience, invested about a little over 1,000 units as general partner and fund manager, and also it'll be over 700 units as a limited partner, in case you're not familiar with the model. But essentially it's manager and also passive investors. I've done both. And also active investing, trying to do single family duplex on my own as well. Well, all those experiences sounds interesting. Really, the three families are kind of my why. I moved to the US when I was 16 years old, seeking for the freedom, right? On many levels, whether it's freedom of speech or just freedom of financials. But as I got older, I realized that really what I needed was the freedom of time. After careers in sales and data analytics and audit, I wasn't getting the time. I wanted to visit my family in China, or spend time with the people I care about to the extent I wanted it. So I essentially figure out how to leverage my time better. That's by passive investing. And that's why I decided to scale the company by helping other basic professionals as well to passively invest. So they can invest well to focus what matters for them. Thus, Life Mission Capital help them focus on their life mission. And a lot of people I help are also first and second generation immigrants. I really understand where they come from, and I'm glad that I'm able to help create the community for them to really take advantage of their time more as well. Now, I'd like to introduce our strategic partner, Christopher Nelson. Chris, would you like to give an intro of yourself before we move on to the presentation today?
Yes, definitely. Thank you so much, Missy. My name is Christopher Nelson, and I am the co-founder and principal of Wealthboard Capital. And so I came to be in private equity real estate through technology companies. So I worked for tech companies for numbers of years and took a few through IPO and was really trying to find a way for my family to deploy a lot of that equity, that tech equity, into passive income producing real estate. And so I've come to this side, been working in this business for 5 years now in multifamily and ATMs and now in mobile home parks. And, just I'm excited to be here tonight with Missy as we are helping educate you on mobile home parks.
Thank you. Thank you, Chris. really the question we're trying to answer today is really two questions. Why mobile home parks now, right? Chris and I, we've been investing in other asset classes, but why mobile home parks now an asset class that we feel strong about, that's really positioned well for the economy today and the housing situation today, and how can we profit with the impact as well? And with so much stigma around mobile home parks especially as well, right? So going to that, let's take a look at the market realities today. S&P, right, year to date, this is last week's data, it's probably similar, negative 24%. Inflation is 8% plus. In fact, I really think the number is not correct, just because we 3 times the money in the market. How can we be 8%, right? But that's what the number says. And bonds, right, is more than 13% down as well. And according to the GDP data, we're essentially in recession already for the first half of 2022. Whether you believe that or not, really, when we look at the recessions in the US, we've had about 11 recessions since 1950s, excluding the Great Depression, just because it's a little bit too extreme. And on average, the recession is about 10 months, with the shortest one was 2020 recession, and the longest one is 2007 recession, which a lot of us are familiar with as well. That's 18 months. An average time between recessions, 5 years and 6 months, excluding the COVID blip. We're about 12 years since the last recession. So whether you believe we're in recession or not, like we're heading towards one, to me, the data is very convincing, being that I have a data analytics background through education and also in some of my professional work as well. I believe we're heading there if we're not already there. So with that, how do we position ourselves as real estate investors, our hard-earned capital, whatever profession you come from? How do we really make sure that we're diversified into some of this less correlated assets that's also recession resistant and also inflation resistant? That's also important, right? Because it's like both big problems are arising at the same time. So I like to point to the data. So let's take a look at mobile home parks and along with other real estate assets in terms of 2009 and 2020 recession with COVID as well. You'll see from the chart, it's documenting the net operating income growth throughout the years since 2000. And you see that mobile home parks, manufactured housing, as documented on here, is really going up even through those 2 recessions that's mentioned. And, that's really good for us, not just from a cash flow standpoint in commercial real estate or investment. As you guys have noticed, the value of the assets is really heavily dependent on how much income it produces as well. So whether it's from cash flow standpoint or appreciation standpoint, mobile home parks has been riding the years really, really well compared to other asset classes like apartment complex, industrial, etc. So moving forward, we're also projecting mobile home parks continue to do well across other asset classes as well from some of the reports we can see here. However, what's really driving all this growth in mobile home parks? Here's a few factors to consider. In economics, we always look at 2 things at a high level, that's supply and demand. But when we dive a little bit deeper into it, we can break into kind of 5 factors. Number 1, from a demand side, is really demand for affordable housing. And most of you may not relate to this. I do have a friend who grew up in the mobile home park, so she relates to it, even though she's an accredited investor today. But the truth is that almost 20 million Americans, 1 out of every 18, live in mobile home parks. And baby boomers, they're retiring every year with very little savings, and a lot of them living on Social Securities. And their only option, compared to a lot of the people, is low rent apartments or mobile home parks. So I want to remove the stigma a little bit that some people may think mobile home parks may not be as good, but it is truly affordable housing out there. And if you invest with the right intentions, with the right partners, I believe we can make impact out there as well with clean and safe housing. So that's alone the demand piece. And the second piece is supply. There is about only 10 new mobile home parks built in the entire US in a typical year against the typical current stock of 50 parks. Mostly due to zoning restrictions. We'll talk a little bit more as well why there is such a supply. People basically are not building as much. And because in mobile home parks, right, apart from, most of you are probably familiar with, you collect rent from apartments, mobile home parks, you can potentially collect rent from two places. It's renting a lot and renting a home. Our strategy is really to focus on letting the tenant have the home and us really renting out the lot. And it's harder to move homes typically as well because there's a lot of cost involved. And because of that, we tend to have longer tenant as well. They tend to stay there longer as well. And it's a lot more affordable compared to apartments. And the next reason is really about the market, fragmented market, right? Like, who are we buying from? We're really buying from smaller mom and pop operators. They're not institutional investors, even though institutional investors spend years trying to get into the space, but it's hard for them because it's an asset class. It's really hard for them to understand and operate as well. And that's really good for us. What that means for us today is that, it's possible for us to generate 10% cash on cash returns. And we can add value by adding additional lots, or adding additional mobile home parks on the existing lots to increase the NOI and refinance and get cash flow. Even though it's becoming more challenging with interest rate, it's still possible with this asset class today. Now let's talk a little bit more about kind of the demand, right? We're talking a little bit about the baby boomers, and the need is really out there. And some of the quick stats is, as you see a little bit on here, right? 45% baby boomers have zero saved, and 28% has less than 100,000. They're the people who are close to retirement age, right? Like, they're basically going to be likely someone in your neighborhood, grandma perhaps, or could be your mother's age, and they don't have as much savings. So they really need an affordable home. And this is where the need exists, especially with the recent inflation. Prices have, depending on the area where I live, they've gone up like 30-40% in the last 2 years. And that's really, really needed to have affordable housing. And kind of to dial a little bit more on the supply aspect. Why aren't people building more if we need it so much, right? Let's look at the building activities in general. Like, a lot of you probably have seen what I've posted out there. There is about 5 million housing shortage. And when people are building, they're not really thinking about building mobile home parks or mobile home manufactured housing as much. They're thinking about apartments. And there are so many demand out there across other areas as well. And so that means mobile home parks, it's really shortage on top of shortage. People aren't building. And mostly because municipalities, they're saying, not in my backyard, we don't really want to have mobile home parks here. It doesn't look as nice, etc. And there's a backlog of building apartments. And with a lot of the builders just simply didn't come back after 2009 recession. So if they are building, they're building apartments more. So that makes the shortage even stronger. So if we think about, again, high-level economics, supply versus demand, right? The demand is strong, increasingly strong, especially with potential recession or existing recession, whatever your belief might be. That's increasing the demand even more, with more people, right, moving maybe from Class A to Class B, Class B to Class C, and Class C to maybe mobile home parks. And the supply is so little, so constrained supply that makes us having this awesome opportunity to invest in those assets to bring up the value for both cash flow and also for appreciation as well. Now I'm going to talk a little bit about impact and profit with us. So before I always looked at mobile home parks like it's not the area I wanted to invest in because I wasn't sure the type of tenant profiles or resident profiles, and if I would feel comfortable investing in them. We'll have expertise because it is a fairly operational intense asset class. However, like all other asset class I work with, I found operators who are really good at operating the asset class in those specific areas. So the first thing I would look at is location. So our strategy is really to focus on the high demand for affordable housing area. So, this is kind of a chart from the Harvard University here. You can see kind of darker orange colors where there is even a more intense need for affordable housing. That's really where we want to focus on. We want to pick the right market. So an example market is Fayetteville, North Carolina. I visited there earlier last month. and looked at some of the properties that we're going into investments with, right? This is an area where the city is growing. As you all know, North Carolina has been experiencing a lot of growth in the past few years with technology in different areas. So a place like North Carolina, where the metro population is about 400,000, medium income, we're looking for something around 44,000. And we're looking for areas where the two-bedroom rent is about $900,000. In fact, when I visited the place, I looked at apartments.com, and I noticed that actually a lot of them are trending more towards $1,000 plus as rent continue to increase in the spaces. Or when we rent out to our residents, right? If they want to rent out the homes, that's about $200, and the lot separately is $400, and that's a lot more reasonable compared to $900 or $1,000 a month. And the goal is really to get them to own the home so that their cost will even be lower. So the overall rule of thumb is to be able to find markets where the lot rent, we can charge about around 50% of the two-bedroom rent. Our general business plan with the partners we selected, and we're working with Chris and his team, is to have more cash flow and be able to really make it more of a legacy property for us. I know there's a lot of syndications with different business plans, but we're really focusing on being able to acquire and stabilize in year 1, year 2, and optimize in year 3 and year 4. Between year 5 and 7, return investors' capital while we continue to cash flow throughout the hold. That way, it's truly a passive income for people who are maybe closer to retirement, but wanting to have this additional source of income on the side without having to work a separate job for it. So typically in the mobile home parks, it's a little bit harder to finance. So we work with regional debt and also owner financing. We like owner financing a lot because a lot of owners also don't want to incur really huge tax liabilities. So we can come up with a good plan to work with them. From an operations side, we really love this asset class compared to multifamily right now, and mostly because multifamily, it's really hard to cash flow at the extent that we can. There's still investors that want to invest in them, but we just wanted to offer the high cash flowing opportunities to our investors because a lot of them are looking for this additional source of income that mostly comes from less expenses than multifamily. Multifamily, depending on the area, we're looking at between 40 to 50% in terms of operational expense ratio. In mobile home parks, we can be between 30 to 40. It could even be a little bit lower depending on how the operations are done. And we have a strategy to move the homes to be more resident owned. On one side, it gives more affordability to the resident. On the other side, it's less maintenance and expenses for us as well. So I mentioned a little bit earlier, I went to some of these properties. Actually, we made about like 8 to 10 stops driving around North Carolina. I thought it's all going to be like Class C areas. Actually, that's not true. I found this actually to be a scenario fairly common across some of the mobile home parks as well. As the city, especially metros like this expand, the C area slowly, depending on the area, slowly grows to a B- areas. And perhaps it used to be a C area, but a lot of them are actually, in fairly good neighborhoods, in single family homes or duplexes. It's fairly organized from the exterior that I saw. So at this point, and we've already done our due diligence, we found a partner, with Chris and his team that we felt they're experienced partners. We've already done due diligence on the physical assets, also financial standpoint as well. And from what we've seen, in the community, talking to residents, we felt that we're doing the right work out there as well, building the community. I spoke to, because we were driving around, and when one resident came up to us and told us how she felt safe living there, she had like 8 or 10 granddaughters with her, and they play around in the park and etc. So I think, it meets the goals for us in terms of providing affordable housing, clean housing, and safe housing. On top of that, we're able to bring out investors' return. So we're ready to launch the opportunity next week, and we'll dive more into the numbers and the exact details. If this is something you're interested, I recommend you to schedule a passive investing strategy call, especially if we haven't talked recently. So feel free to pull up your phone and scan and book a call here. I'll leave this on here. And meanwhile, while opening that for Q&A, we'll give it a second. So Chris, tell me some of the things you're excited about with the latest acquisitions we're working on.
Sorry, just had to come off mute. So, I mean, there's a lot of exciting things that are happening. And so I think here's a couple other things. Number one is in our latest acquisition that we have, this part of the fund that everyone, will be participating in is we just got the appraisal back for $1 million more than we paid for it.
That's awesome. I love it.
That's great news.
Like that happens.
And well, and I mean, one of the things that, and I literally before this call was going through a report, and when I look at, where people are being successful and they're still paying, $40,000 a lot, our average per lot on this is $32,000 per lot. And that's a very, very low average compared to market. A lot of this has to do with deep relationships, our off-market deals. And then, the reality is, and it goes back to what Misi's saying, is that we believe wholeheartedly in this space that we can deliver phenomenal returns to our investors, and we can create very healthy communities where people thrive. And it's because of both of these things that we're able to produce really phenomenal returns. And so this is where park owners, many of them, when we say mom and pop, we're trying to be descriptive. We're not being dismissive. And it's important that people understand that when somebody has purchased an asset 40 years ago, 35 years ago, that's part of their legacy. And so when they then see somebody coming into their community, focusing on safety, focusing on cleaning things up, they really want to be a part of that. And so this is where, we get the opportunity to, do good on both sides. And that's exciting.
That's awesome. Thank you. Thank you for sharing that. I love the $1 million. That's good for all of us going into it. And I know that, we already have existing assets in this opportunity, and we're closing up this year after this time as well, just because with the interest rate and the market's harder and harder to get 10% cash flow.
That's right.
Buying existing cash flow and assets as well. So
right. We were joking the other day that this is the last call for cash flow. Like both Misi and I, as we, have been through the numbers, and it's just apparent that we've bought low, we've secured long-term debt and financing all of these. We have a clear line of sight to 10% cash on cash return with upside as we execute our business plan. We don't know what it's like going into next year. So now this is the last call. We are what originally was going to be a $10 million fund. It'll be, $8 million in total. And we're going to close it out because more than anything, we want to protect investor returns. And that's something that I know is both Misi and I are deeply principled, and this is important to us.
Yep, definitely. So one of the questions that we have here is about how we select mobile home parks in general. Can you talk through the general criterias?
Sure. General criteria is, our focus is 95 pads or less. One of our main, when we started executing this business plan, we wanted to come to these secondary markets that are, so Fayetteville, for example, is an hour and a half outside of Raleigh, Durham, has great industry there, but it has a high density of mobile home parks. What do I mean by that? 400,000 person MSA, 400 mobile home parks. Just let that sink in. 400 in that small MSA, and 75 of those are the 100 pads and above. That's where there's a lot of competition. Where we do is we walk into and meet these owners of the 95 pads and below, and we shake their hands. We get to know them, and we talk to them about how do we transition these. So then we're in a no competitive situation, and we'll describe it. So 95 pads and below, we are looking for something that is a 3 to a 4 star. Mobile home parks are 5 stars to 1 star. 1 star, we would not feel safe walking in there. 5 star is going to be, something that is going to be, coastal 55 and up, that they may even have $100,000 manufactured homes. we're playing in sort of that value add space, and we walk in there, we talk about, and then we look for a lot of park owned homes. What this means is that then we have control over the property to be able to renovate the homes, get all the park looking very similar, get a nice aesthetic, clean it up. And then we also do have the ability to transition out people that don't want to abide by the rules of the park and who do not want to abide by the laws, because some owners, especially as they're operating the park and they may live an hour or two away, they may not focus on background checks. They may not focus on these things. So it's truly important for us. Part of our mission is physical safety comes first. It's the bus stop rule, as Misi said, the woman really feels like she feels her daughters can walk to the bus stop, play safe. That's important for us. But anyway, the attributes are park owned homes, owned by a smaller owner. They usually have little to no debt. And then we also just look for, key operational efficiencies that we know. Many of these that we've taken over, they may be running at a 50 to 60% occupancy, because these owners run it as a cash business, meaning that they're focused on getting the cash they need at the end of the month. They're not focused on operational efficiencies because, again, usually they have little to no debt. So it's, do they have the income they need? But those are the majority of the characteristics that we look at.
That's awesome. Another question is about our partners in the North Carolina space. I know you have a close relationship with Brian and Bo. Can you talk about kind of their operational expertise and already existing operations in the area?
Sure. So Ryan and Bo are both mobile home park operators. Ryan is our senior partner. He's been in this space for coming up on 8 years. He's got 3,000 pads in major metro areas. And as he and Bo were operating and working together, they realized that there was an opportunity in these smaller metros with these smaller parks that could be more for cash flow and less for some of this appreciation. And so both of them, are very experienced. Ryan, his depth of experience is in operating mobile home parks, and he is a walking encyclopedia, because to get into the business, he decided to live in mobile home parks and learn the business from boots on the ground. Bo came in, in the last 3 years to coming into mobile home park ownership. And he came out of being a 20 plus year veteran in the United States, special operations teams. And so he is focused on building teams. And so he is boots on the ground with our operations team, ensuring that, they're adhering to our policies, procedures, and help turning them into leaders.
Got it. Yeah. And from what I know, it's not an easy space to operating. Why do you think it's so challenging for people to getting, can I just be like, hey, tomorrow I want to go own a park, right? Like, what are some of the things that's difficult for people?
Well, I think, first and foremost, it is, it is definitely a management intensive in the sense that, there is a lot of interaction with the tenants, and in creating the relationships, stabilizing those relationships does take a lot of time and patience. And so, I think that's number one. Number two is, it is a collection intensive business, right? There is maintaining that relationship, managing the collections, very important. And then rule adherence, right? We have to make sure that we have somebody's driving by all of our parks at least once a day, at least, to make sure that rules are being adhered to, that, trash isn't being collected, and other things as well. So it's truly that nature of touch that can create a higher level of intensity. The flip side is that operations, we look to, have our tenants become home owners, so they own the home. They're responsible for the expenses there. But, making sure that, again, they maintain the park and those things is definitely intensive. Yeah.
Got it. I think that's all the questions I see out here so far. I'm going to wait a little bit more. Meanwhile, we're going to open up another poll, just getting everyone's feedback about how everything went. And we're excited to launch the opportunity. We'll do an early launch next week to some of our existing investors and some of the people that expressed interest in this opportunity. So if you're interested, feel free to book a call with me, and we'll get you on the list for early access, because we do have limited spots with what we have put under contract in Fayetteville, North Carolina. As expressed, it's harder to cash flow with the interest rate and what we're seeing in the market. So we're going to close this fund after this asset here.
Yeah.
Awesome. Let me see if there's any other questions here. Okay. Now the question is, what are the common misconceptions about mobile home parks that you have learned in this process?
Well, I mean, the common misconceptions, you know what I mean? I think you mentioned that as well, is that there's a misconception that, oh, when you drive into any mobile home park, it's going to be quote unquote on the bad side of town. And that is not it. And this is the very interesting thing that we're finding these smaller parks. Is we have a park where it's in one of the best school districts in North Carolina, in Fayetteville, in North Carolina. And it's a very nice mobile home park. I think the other thing is there's misconceptions based on television. I think people they think that they look through the tenants through a single lens. And the reality is that in a park, you're going to have a myriad of tenants that have, you can see the whole rainbow of life, from somebody who's retired, didn't have a lot of savings, but they had a house. So they sold their house, living in there on a fixed income so they can have the dollars to take trips and do other things, to somebody who, was living in their car, had bad credit, but now works at the chicken processing plant and now just wants a good place to live and is just trying to continue to move up, to, people who've immigrated, who are looking for this as the first opportunity to just land here, and they want to save money to really try and get ahead. So the misconception that, one size fits all when you walk into a park is not true. It's everybody is very different. And then also that communities don't want to change. I mean, I think we come into some of these parks that just have not had attentive management, and you get people who are so encouraged and who encourage us, right? Who you hear these stories and they breathe life into you. Yeah, I mean, I think the other misconception too is that just trying to understand, sort of that technical difference between mobile home, manufactured home. A lot of these mobile homes, are older. They're steel structures, but they have great bones, and you can actually rehab them very, very well. But that was something that it wasn't a misconception, but it was something that I learned, just getting into the details there. Yeah.
Yeah, definitely. Yeah, I can attest to what you said about, some of them are in better neighborhoods as well. That what I thought. I think I know the school you mentioned, because I did drive past it and saw a lot of single family home and et cetera next to it as well.
Yeah.
So we have a question coming in about what kind of returns are you seeing in mobile home park investments in general. Maybe you can also, add on to that, because it is a fragmented market. You can talk about how hard it is to fund this type of opportunity we're investing into.
Yeah. I mean, I talked about it a little earlier. I think that on the top end of the market, when you're looking at these manufactured housing communities, they're trading at very compressed cap rates. And so you're going to find that, very similar to what we've seen in multifamily for the last few years, where mobile home parks were, let's say in 2018, 2019, were yielding 10%. That's getting compressed in some of these larger funds where they're buying these, 5-star parks are getting compressed down to 6%, 5%. And again, a lot of this depends on how people are managing funds. Are they taking dollars up front to try and deploy later? Are they deploying capital as they get assets, target assets, and they're doing capital calls? All very different. I think that, as I mentioned before, when you look at the key thing that you want to look at in mobile home parks to really understand how they're cash flowing, tips and tricks with Misi and Christopher, right, is you want to look at the spread between your price per lot. So that's the lot is, when we buy, we talk about, okay, we're buying 166 lots. That's the areas that have been, leveled. They brought the services, the water, the electricity, and the sewer, and it's ready for a home, because sometimes we have more lots than homes. But when you price it by lot, and then what I was telling you earlier is I just went through this report where people are paying, $50,000 or $60,000 a lot. And so then the 1% rule means that if you pay $50,000 for a lot, you need to be getting $500 lot rent. Then you can look with expenses and everything that could cash flow maybe 8% or so. With us, this is where the real opportunity is when we're buying low and we're buying these around 32,000, and lot rent right now, what we're seeing in the market is 450, 475. So that's where for us, like what's different about us is because we're going into these smaller parks where we're not having competition, we're buying very low, we have a much healthier spread where we can then be delivering the higher cash on cash return, especially now that we've locked in, interest rates, and we've locked in for this final one, 5.5. We're going to be able to then deliver that. But those are the things that I would look at when you're looking at a mobile home park investment is, again, like anything else, cap rate, but the cost per lot and the lot rent, it's very similar to when you think about a multifamily, you look at what's the cost per door and then what's the rent per door. And you want to look at that 1% rule says that, okay, we're in the money, we're in cash flow.
Yeah. And then for those that's not familiar with the 1% rule, a lot of people use that, like the rent to collect should be close to 1% of how much you pay. So yeah, buy right, manage it right, and have the right financing. Those are three critical components when we look at investments in general. And we're excited that we locked in a good rate, 5.5%, and also appraisal value, right? There's nothing.
Yeah, and that other park, and the park that we just
more.
Closed on, yeah, that was phenomenal.
Yeah, and that one is part of the fund that we're gonna go launch.
That's right.
Week or so as well. Great. I don't see any other questions. So if there are any other questions, feel free to share here, put in the Q&A. We're going to give another 30 seconds. But otherwise, we're going to probably end the call early here, just giving you guys a little time back. Make sure, if you're interested in investing, that you check some of the emails we'll be sending out in the next week or so, and get on their list, early access list as well. Great. Well, appreciate you. Well, just always as we're, so someone asked me to put up the QR code for scan one more time. Yes, I can do that, but I can also just send out, put it here in the chat here one more time, and also put it on here a bit bigger. So for those that want to scan, more of a mobile person, here it is. You can scan this QR code. But otherwise, thank you all so much for spending your evening and learn about this cash flowing assets, how it can help you towards your time freedom, most important precious resource in the world. So financial and time freedom and geography freedom. So thank you so much again. I will end the recording here now. Thank you.